But let's focus on Zen Technologies. Quarter one was a decent one. The revenues grew by more than 90% and also had a 60% growth in profitability. The gross margins contracted a little bit and new order wins was a little bit subdued. Mr. Ashok Atluri, the chairman and MD of the company, joins us on the show. Hi, Mr. Atluri. Good morning and always good to have you on the show. Give us a couple of basic details first. You had guided that in this year, the revenues will double in comparison to last year. You look to be on track for that. Do you want to stick to that guidance or do you want to up it? And also exports, I think you guided for closure on 300 crores of revenues from exports. In quarter one, it was absent. You want to revise that number downwards?
Yeah, so we have assured that we would do about 900 crores. So we expect to do about 900 crores. And that guidance remains, Nigel. And with respect to the exports, so again, the export target absolutely remains that it will be 300 crores. And we, again, it's not in a perfect proportions that the, domestic and exports happen every quarter. But over the year, this is what was, and we still stand by that. So those are two things, yeah.
Mr. Atluri, morning. I mean, last time we spoke, you said it's an unprecedented positive environment for the business. It's been an unprecedented positive environment for your stock as well, which is, which is zoomed. Now, you also told us that you're looking for acquisition opportunities. At that point, with some IP. Are you closer now than you were a month, 2 months back?
Yeah, I mean, we are talking to some companies, but we haven't really any near to closing the deal. But yeah, we have been talking to both Indian and foreign companies. But maybe in the next couple of quarters, we should be able to hear something about it.
Next 2 quarters, you'll close
quarters,
something.
Yeah.
Yeah,
we may be closer to announcing something. Yeah, so
okay.
At this point in time, there's nothing. Yeah.
And what kind of size, etc.? I mean, broadly, roughly.
I mean, it will depend on the kind of, but we are little flexible between 100 to 500 crores kind of thing. But yeah, we are flexible about it.
Okay, Mr. Atluri, good morning. I wanted to talk a little bit about your order book and the order wins. The order book currently stands at 1,160 crores, but I noticed that your new order wins stood at just about 11 crores. Can you tell us a little bit about that? Are you seeing slower movement in terms of orders? And what is the kind of visibility that you have? Any reason why there's no significant win in this quarter?
So we have indicated almost in a couple of quarters back that all our orders will be expected in the fourth quarter, but some may start trickling in on the third quarter. So this is a typical order cycle that we have seen in over many decades. Only last year there was an exception because there was some emergency procurement was done. But the regular procurement typically is heavily weighted towards the last quarter.
Okay.
So any numbers that you want to give us in terms of, any fresh orders on the export side, on the domestic side? 70% of your domestic order book comes from the training simulators space, and you also have anti-drones, of course. But going forward, where do you see a large chunk of your orders coming from?
So, we will continue to get the orders from these two segments. I think maybe it will be a little more in favorable of anti-drone systems because we are seeing that lot of traction that product has now, a lot of demand, not only domestic but exports also. So yes, we expect the orders to come in during the third and fourth quarter, and they will significantly, again, we are saying that we should be able to achieve a CAGR of 50% next year onwards. So we still feel confident that may be reached by us.
Okay, all right. You want to comment on the margins, Mr. Atluri? 40% margins on an average for the year. Should we stick to that?
So we have been saying that it will be around 35 to 37% EBITDA and around 25% PAT, and we would like to stick to that.
Okay, all right. Mr. Atluri, we here at CNBC-TV18 had covered the stock and explained it to the viewers when the market capitalization was less than 1,000 crores. Currently, your market capitalization is around 14,000 crores. We had just explained it to our viewers. The question I'm asking you is, now you could potentially raise 1,000 crores via QIP route. And that's something that the markets are waiting for. When does that take place? Is it dependent on that inorganic acquisition? Or do you think any which ways you'll go ahead, say in this quarter or so, that's the second quarter?
So we have an enabling provision we have passed in the with the shareholders, and that is available to us. And depending on the internal decisions and the discussions, we will raise the money so I think both may happen simultaneously or little consequentially. But yeah, we have the power to raise the money. There's no doubt about that. And if required, we will raise it.
So a couple of quarters to hear about that inorganic growth, and maybe in the next couple of quarters, we'll hear about this QIP as well. In calendar year 2024, both will be folded up, right?
Yeah, so I wouldn't really mention the dates like that, but yeah, we would be moving in that direction, absolutely.
Appreciate you joining in, Mr. Atluri. 900 crores of revenues for this year, margins at around 35 to around 37%. Exports, you're sticking to that 300 crores and sounding extremely confident about business. Look forward to chatting up with you rather soon. Just take a look at that. 40% in the last 1 year or so, but I think in the last 6 years, the stock is up more than 10 times. That's the big move that we've seen.